Hello, and welcome back to CryptoCast. I'm your host, James Burnie, and today we're going to be exploring decentralized finance from what it really is, why it matters, and how it's evolved over the years. To guide that conversation, we're joined by none other than Tobias Van Amstel, co founder and CEO of Altitude. Altitude is a DeFi protocol that unifies established DeFi lending rails to make borrowing more efficient. It automatically manages liabilities, refinances loans when better rates come up, adjusts loan to value ratios, and puts unused capital to work. Tobias founded Altitude to create a platform that focuses on simplicity, automation, and solving real user problems whilst removing unnecessary complexity. Tobias' own use of DeFi experience in building successful Web2 technology companies and his user-first approach has helped to shape Altitude into creating a DeFi platform like no other. I'm looking forward to talking about what the next phase of DeFi might look like. Welcome to CryptoCast, Tobias. It's great to have you here.
Thanks, James. Thanks. Good to see you again. Good to be here.
So just setting the scene to start things off, for those who aren't aware, of course you've got DeFi and you've got CeFi. Can you give a bit of background as to what do people actually mean when they talk about DeFi and what is it really for the common man?
Yeah, that's a great question to start with. So, I think that the core difference between CeFi and DeFi is that is the self-custodial part. So with DeFi, you normally keep your assets in your wallet, and you put the assets go from your wallet into a smart contract, so they stay on the blockchain. With CeFi, you usually send your assets to a wallet that the CeFi company controls. So that's the main difference. It's kind of custody. Um, so with the CeFi, they can do with those assets what they want. They move them around, and with DeFi, they stay in the smart contracts.
And why wouldn't I want just to go to my local friendly CeFi and use them? What would attract me towards using more of a DeFi approach to dealing with crypto?
So it's it's an interesting question. So I think there's a trade off there. So in DeFi, everything is transparent and governed by code. So when you put your assets into DeFi, you put your assets into a smart contract. That smart contract is usually audited by security auditors, and as long as you follow the rules of the software, you keep control of your assets. With so that's about control. With CeFi, you send your assets to their wallets. So from that moment onwards, they custody your assets. They are in control of your assets. Then you are relying on the CeFi party, on their legal setup. Some of them are regulated on many levels. Others are very lightly regulated. You're relying on their risk management. So that's the difference between the two.
I'm curious, just off that back of that synergy, because of course your firm looks more into the DeFi space. From a personal perspective, what brought you to kind of come down on that side of the fence rather than, in some ways, might be more the easier path in some sense, the more CeFi approach where you have a firm that's more traditional.
Yeah. Well, for me, kind of the when I got full time into crypto was during DeFi summer, and for me it was kind of the convergence of technology and finance, and kind of the vastly open space where you could build things, and that's from an entrepreneur, from a builder's perspective. DeFi basically means that you can build things on top of other things. So the smart contracts are composable. And so that space to me is a lot more interesting to build something in. Whereas in CeFi, it's kind of the old school approach where you need to partner with someone. You need to kind of really work together. And in DeFi, it's kind of permissionlessly building on top of each other. So that's what kind of I got very excited during DeFi summer, and started to play around with all the protocols out there. The yields were very good. And kind of then we came up with the idea of altitude. So then started building altitude, and that's why we're in DeFi.
And we could also just sort of build up because people talk about building crypto, but things tend to fall in different kinds of boxes almost in terms of source of things that got built. Just for those, because a lot of people talk about DeFi in the abstract sense, but in terms of sort of concrete builds you're seeing, what kind of concrete builds do you see? And actually, with altitude itself, what's altitude itself? Is it covering across all different types of DeFi, or is it a particular type of build that you're interested in?
Yeah, so there've been a lot of experiments in DeFi over the last 5-6 years. Kind of the core use cases at the moment are lending and borrowing. So where kind of lenders and borrowers come together, and swapping or trading. Those are kind of the two biggest use cases, and then there's kind of real world assets, which is tokenization of something that lives off chain. So those are the kind of the core use cases. And then there's lots of things that you can build on top of. So there's for example protocols that will kind of split a variable yield into a fixed yield and a variable part, where basically you come in with the normal variable rate, and then there's on the other side there's two people. One say, okay, I'll take a fixed part, and then the other person will take the up or the over. So that's one example of composability in DeFi, where you have the lending protocol maybe as a fundamental, and then like a kind of a splitting of the rates in as a building block. Another one is tranching in kind of junior tranches and senior tranches, so that you're splitting the risk. So all of that is possible in DeFi. If you build a protocol that, for example, splits the risk in a junior tranche and a senior tranche, then you don't need to ask permission from the lending protocol to do that. You can just take their collateral token or their yield bearing token, and then it works in your protocol.
I mean, it seems like it's kind of broken down that way. What sorts of people are kind of using this then as coming into it? Is it an area that's kind of expanding or seeing over time, or because we see all these new rules coming in globally, are you seeing things contract more? I mean, is business booming?
So I think by pretty much all metrics, DeFi is still booming. Lots of so TVL is growing, new users are coming in, transactions are up. In the beginning, I think it was a lot of it's kind of a classic kind of adoption curve, where in the beginning it was just early adopters, and now kind of DeFi is working its way kind of through the adoption curve. In the beginning, lots of people that were very technical, very optimistic, and excited about kind of finance and technology, and that kind of the crossover.
And do you think because it seems how this often goes, currently we're also seeing things like AI also turn up as a completely separate spanner in the works potentially for things and doing the rounds. Do you think AI is going to come back and do you think it's going to impact DeFi heavily, or do you think actually it's going to be almost two completely different streams with DeFi doing one thing and AI doing something completely different?
Um, so the way I look at AI is it's a technology, right? And DeFi, I would say, is also a technology. And so I think AI will definitely impact DeFi. I think AI will impact how DeFi is being used. I can see a very strong use case for agents, either kind of collecting data on chain and reporting that back to whoever makes the decisions. I can see AI suggesting kind of a portfolio optimization, and I can see AI agents kind of paying each other, or paying kind of vendors through kind of stablecoin transfers, for example. So yeah, I think there's a big crossover between AI and DeFi. Um, the one thing I think that we should all be careful about is how much control, obviously, do you give an AI agent. They, as we all know, they can kind of hallucinate, or they can kind of try to be very helpful and therefore do something that you didn't really want to do. So kind of unintended consequences. So we at Altitude we use DeFi, we use AI a lot to kind of inform us and collect information and monitor everything. And but we don't. The actual decisions are still made by humans. And I I think we'll be in that space for a while.
Do you think 'cause at the moment, AI is kind of branded as changing everything? Do you think you're going to get to that level? Or do you think it's going to very much stay kind of as a helpful tool, but not necessarily dominant, effectively, in that kind of a space? Because there's a kind of a concern that AI agents get out then and the damage they could potentially do if they do go off the rails, particularly in a world where everything else is automated with smart contracts. Maybe there's an issue in terms of like how you keep that kind of thing in check and stop it from hitting the buffers.
Yeah, yeah, yeah. So I think I've been I've seen AI evolve very rapidly from not even being able to do some simple multiplication um, to kind of and then kind of ingesting an annual report and spitting out completely wrong conclusions. Um, to a point now where you can feed it an annual report and it actually comes up with spot on conclusions and some great follow up questions. And so I think the models are ever evolving and they're improving very rapidly. So I think they can be. I can definitely see a future where we trust the AI models a lot more, or the AI agents a lot more. We're not there yet today. We definitely need humans in the loop. Um, so at altitude, the AI agents can't make any decisions. They can inform us, and then we make the decisions. I can see a world where where you slowly move to like the decisions that are like the smaller decisions, the decisions that don't really matter that much, that you start to hand those over to AI agents. Um,
And just coming back to ask yourself, is there anything kind of you're building at the moment or seeing which you're particularly excited by in terms of kind of things happening at the moment? Because I'm aware, a lot of you are very much at the coal face. You really do see DeFi as it happens. I think a lot of people hear of DeFi, but far further down the line, so they almost, see the ship that's already left the harbour. Kind of, is there anything at the moment which you think just sitting on the front line, think is kind of new, exciting, or anything you're doing at altitude which is new and exciting?
so I think for kind of the general public, the most exciting thing about DeFi is that it kind of through its transparency and composability, it opens up complex financial instruments to pretty much everyone. So I think um, pre crypto, pre DeFi, it's the banks, it's the bankers that use financial instruments, and it's the banks and the hedge funds that can use those financial instruments to make a lot of money, and kind of the normal people just put their money in the bank, buy an ETF, buy a bond, and that's it. I think DeFi, because of its open nature and its transparency and its composability, it allows all of these financial products, and it allows access for normal people to those complicated financial products. And it allows builders like us to simplify those products or simplify the user experience around it. So, as an example, with Altitude, we have this concept of self-repaying loans. And in essence, it's very simple. It's like you deposit collateral, you put an asset in our smart contracts, then you borrow against it, and then let's say you borrow at 20% loan to value, then there is borrow capacity left. You can borrow more against that asset. And so, what a bank would traditionally do is they would use your asset to borrow more for themselves and earn more money for themselves. What we do is we take that borrow capacity that's yours, we deposit that into low risk DeFi to generate yield for you. And so, therefore, that extra yield that is generated for you, it reduces the interest rate that you pay. And it can decrease the interest rate to a point where the loan repays itself. So you have a negative interest rate. Um, that's an example of a pretty complex financial product, or kind of a complex financial chain of events, that banks and CeFi, for example, do continuously reap the rewards from. But DeFi opens this up to kind of normal users. Now, there's obviously a caveat: is that these things are not risk free. There is risk involved, but that's where the reward is. Yeah.
Because I go, I'm aware that altitude is not available for UK retail because of issues around plant thresholds and the like. Just more broadly, do you think these rules coming in, and we're seeing them globally, do you think that DeFi is going to struggle to comply with all this new legislation coming in across the board? Is it keeping you up at night? And do you bluntly think that actually we're at risk of losing the advantage of DeFi by bringing in all these additional barriers, which almost defeats some of the value which DeFi can bring to the table in terms of the ability to access these forms of products?
Yeah, 100%. 100%. I think, yeah, you're spot on there. Um, Listen, I'm all for protecting people from scams. Um, I am and I think there's a place for government regulation, where I think government regulation gets kind of dangerous and not so not so beneficial to the general public, is where the government uh, like tries to protect people by forbidding them from using a certain product, or forbidding them from doing something, or forbidding the whoever offers that product, forbidding that the company that offers that product to that user base. I think what you do then is you basically say people like, you're not smart enough, like you can't be trusted to make the right decisions, therefore the government decides for you, this is not for you, you should not be taking this risk. um, I think that's that, and that comes from an angle, from a willing government, or a government that has the right intentions. Um, we also can't ignore the fact that obviously the banks are kind of an extension of the government at this point, because they're heavily regulated, um, and governments like control, and so it's in the government's interest to keep control, and to therefore shut out DeFi, and let the banks kind of win this field, right? But let's if we're optimistic and we say, okay, there's a well-willing government, there's another argument I want to make around giving people, like empowering people to try this stuff out. I think the younger you are, and with small amounts of money, if you try this stuff out, you learn, and then you understand the things that you should and shouldn't do. Whereas if you forbid people to use it, eventually they'll find a way to use it, and they might lose a lot more money than they would have to begin with. So I think, yeah, I'm worried that the governments will overregulate, and that therefore DeFi will not be accessible. It will shut out retail around the world, and it will make these financial products again only accessible to the hedge funds and to the banks. Yeah,
Yeah, I mean, it's an interesting debate because you give people comfort and you charge them for that comfort, and it's always going to be an interesting question. One thing which is interests me in terms of kind of the latest from the FCA on lending is when you look at the consultation papers, the FCA sees lending in crypto as being very different from lending in fiat. And what's been interesting is like the proposed approach from the FCA, therefore, has been quite a different one. Just, as someone who's kind of more into the building of the product, have you found that, crypto lending is entirely different to lending as you know it to date? The ideology, the approach to it, how do you go about then building a product in lending if actually all the traditional assumptions don't really apply the way you would expect?
yeah, that's a great question. So I think when it comes to lending, um, I think it's very important what you are lending against, and I think so in crypto, the primary the vast majority of lending is where you lend against an asset. So the loan is always guaranteed by an asset. And that means that, let's say I lend out $1,000, then the person on the other side, that the person that borrows it, he has to bring collateral worth more than $1,000 in order to borrow my money. So I think that's collateralized lending. It's a fundamentally different game than under collateralized lending, which is what most traditional lenders do, where you lend money to people and then hoping they pay it back from their future cash flows. Right. So I think they're right to treat it differently. The other interesting thing I think in DeFi is that everything's transparent. So if I lend out my, let's say, USDC, I can see where I lend it out and who borrows it. Not the person that borrows it, but the smart contract that borrows it. So the conditions under which it is borrowed. So I have full visibility on, okay, what's the actually the asset that's backing it. So if I lend out money in DeFi, I can choose if I only want to lend against Bitcoin, Ether, two kind of very proven assets, or if I want to go up the risk curve and lend it to more exotic assets, and that's then my choice. So I think yeah, there are two fundamentally different forms of lending. In terms of borrowing, like who's on the other end, I think it's also different because um, if you lend money as an institution, if you lend money to people, um, and um, and those people are, let's say they borrow for consumerism, and they can't actually afford the loan, or they can't really afford to pay it back. You're basically dragging those people deeper and deeper into financial trouble, right? Where in DeFi it's collateralized lending, so the person already has the assets. That person already has the money. They have just decided that they don't want to sell that asset, but they want to borrow against the asset. And I think that's a choice that that individual should be able to make. So I understand that the FCA is protective about lending and borrowing to protect kind of to protect people in that sense. But I think in DeFi the type of lending is different.
Yeah, I think one thing which has been particularly interesting, actually, having seen how Altitude and DeFi lending by works in general, is the question of enforcement. Because if I borrow money from a bank and I can say it's against an asset, there's a whole lot of law and things about security, register a mortgage against a house or do something like that, which generally is not kind of the approach taken in crypto. And in crypto, it's even more interesting because arguably, it's a new form of property, is how it's now seen in the UK, because it's more information based rather than, say, someone's house where you register the land registry. So could you give, like, how would you ever enforce one of these loans in real terms against someone, to stop them just taking the asset and disappearing?
Yeah. Yeah, I mean that's the beauty of collateralized lending in DeFi. It's all governed by the smart contracts. So let's say I put in Bitcoin in a smart contract, and then I borrow USDC, right? What's actually enforcing me to pay my USDC back, right? That's what you're asking. Like how am I as borrower? How does the lender know I'm going to pay my loan back? Well, it's very simple. My Bitcoin is sitting there in a smart contract. My Bitcoin in the contract is worth more than my loan. So it's in my financial self-interest to repay my loan to get my Bitcoin back. Now, if I decide to not do that, and if let's say my interest rate, because of the interest that you pay, the interest keeps going up, and at some point you reach a level where your loan is just under the entire value of your Bitcoin. What happens then is that's also governed by the smart contracts. Your collateral is then automatically sold off to cover the loan. So at that point, the lender can just kind of recoup the loan that they gave, because the Bitcoin has been sold off. So that's how it's enforced.
Okay, Just and again, it's nigh impossible to answer this question, so I apologize in advance. But if you're going to predict kind of the future, both from kind of an altitude specific type position and maybe more broadly industry as a whole, like where do you think things are going? Do you think DeFi is what it is, what has been created is, and it's going to be more just a continuation of that, or do you think we're going to see a lot of change over the next few years?
Yeah, it's impossible to answer, James. And okay, I'll give it a go. So um, there's many different directions that this can go into, right? But what I see right now is like 3, 4, 5 years ago in DeFi, most protocols were all catering to the same audience. There were different products, different like variations. Some were copycats. They were all kind of catering to that kind of the internal crypto crowd, DeFi natives that were very excited to try new stuff on chain. So I think they were all catering to kind of the same group. What you now see is that they're all slowly kind of pulling in a different direction. Some of them are going full on protocol infrastructure, don't want to touch the end user. It's pure financial infrastructure, right? Others are going more the institutional side, where they're not really that interested in smaller deposits. They're just interested in getting the big banks involved, the big hedge funds involved, just pulling in loads and loads of money and going into that direction. At altitude, we're going deeper and deeper into the more kind of consumer direction. So making DeFi easy to use and accessible to kind of normal users. Could be ultra high net worth, could be high net worth, could be retail, wherever that's allowed. And what we try to do is, because there's so many options in DeFi, and the interest rates continuously change. So what we're trying to do is simplify that experience and give people kind of one home for DeFi, right? And so currently we offer self-repaying loans. So you deposit BTC, you deposit ETH, and then you borrow stable coins, and then our repayment mechanism kind of makes that it's a self-repaying loan. What we are really keen on is offering kind of a more full suite of products. So borrow, but also earn. So not everybody wants to borrow. Like, let's say if you just have stable coins and you want to earn a good yield on that, higher than your bank, then you can put it in the earn program. And also payments, because like what worth is our assets if you can't pay, right? So we're looking at introducing a bank card, a payment card. We're looking to introduce bank transfers for on ramping and off ramping. So basically, kind of a full suite of products for people to cater to all of their financial needs. So borrow, earn, and pay.
I'm afraid to ask that that's all we've got time for. It's been fantastic. It's been really interesting and a fast explanation of what's going on in DeFi. Thank you, Pascal. It's been a pleasure.
Awesome. Thanks, James. Thanks for having me.